Today I'm going to answer the question, just where is Nomad Capitalist Incorporated? Walk you through our structure, why I set it up, and give you some tips for how you can set up your offshore business. So I was recently asked a question by one of our commenters, why can't you just say where Nomad Capitalist is incorporated? And we've intimated over the years where we've done business. We are a company now that has grown about 23-fold in the last number of years. We have over 60 employees, and I think about 12 different countries now. And so the structure that we have is more complicated than a lot of people's structures may be, and we haven't really gotten into every detail as the business has grown. But today I'm going to walk you through my structure, at least in general, walk through the types of companies and the types of structures that we use and how you can potentially use this information to at least get started with planning your offshore business, whether you want our help or whether you're going to do it some other way. Now, if it's your first time here, my name is Andrew Henderson, the founder of Nomad Capitalist. We are, in addition to running our own offshore business, a boutique consultancy that helps 7- and 8-figure entrepreneurs and investors who want to legally reduce their taxes with offshore structures, with personal offshore tax planning, diversify and protect their assets, and make sure they're always in control of their lives and their businesses with second passports and other internationalization strategies. I also host the biggest and best offshore conference called Nomad Capitalist Live. Now, all that out of the way, I want to give you a very serious caveat, because whenever I see Americans getting St. Lucia's citizenship are up 9-fold, I'm thinking to myself, yes, some people probably watched our videos and hey, if it's good enough for this Andrew guy, it's good enough for me. That's not the case. In fact, I really very rarely these days recommend St. Lucia's citizenship to anybody, because even though it is one of the cheapest, it's the least of the Caribbean passports, right? And so just because I did something, the reasons I did it were probably different than the reasons you did it. I have other passports, and so St. Lucia complemented that. If I'm just getting one second passport, I probably wouldn't get St. Lucia. And so take it from me, the structure that I have works for me, it works for my very unique situation with where I live, what my citizenship status is, where my business runs, where the clientele is. It's really hard to replicate anyone's business, especially mine. So please don't just, let me just plug and play what he's doing, and don't do that. So all that out of the way. Like many businesses, I started this just in my own name. That was very briefly that we did that, because this was basically a blog. I was in the process of selling my final business in the United States. I was really enjoying traveling around the world and then discovering this, and I just wanted to share my experiences, didn't know what it would turn into. And so I think it was basically me with an Amazon affiliate account, and the first revenue was 36 cents from selling a book that we linked from one of the blog posts. And I remember where I saw that very first sale, as it were. And I just didn't know where this was going to go. I just sold a business, and hey, I have a cushion. And so for a while, just those very initial sales was just personal. That's going back a long time. Then we incorporated in Hong Kong, and I've always liked Hong Kong. It was #1 on Economic Freedom Index for the long time. And it was a place where a business like what Nomad Capitalist was initially, where we didn't really have employees, there was no physical presence, it was just all digital. It was a good fit for Hong Kong. I think people think Hong Kong companies are tax-free. That's not the case. You can pay 8.25% on the first roughly 250 grand, and then it goes up to 16.5%. You have relatively liberal deduction standards, even though as a US citizen at the time, you still have to comply with the US rules, so the deduction standards are somewhat hampered by the US side. And so we were able to not have to worry about that part because we just had the offshore status in Hong Kong. However, for everyone who thinks that offshore status in Hong Kong is just some guaranteed thing, we, like most businesses, eventually did get an inquiry, which is not to say you did anything wrong, just to say, hey, your file came across our desk, it's a routine check, and can you please answer, I think in our case it was 9 questions to prove that you're not connected to Hong Kong, which is why you're not paying tax here legally. You check the box, don't pay tax. And so we answered those, and it took a while to get an answer, but they're yeah, okay, we agree, you're cool, thanks for your help. And so that worked. Hong Kong worked for us for a long time. As the business evolved, a couple things were a challenge. #1, Hong Kong has audit requirements, and so if you're coming from the United States, for example, you're used to paying taxes on the honor system. We had employees who were from EU countries, way back in the day, and still a few, by the way, but people who were from Austria, and they're oh my goodness, why do you think this is so difficult? This is better than what it is in Austria, but it was much more difficult than what I was used to in the US. And so it's not go where you're treated better, it's go where you're treated best. As the business got more complicated, the audit requirements just became, and no auditor is as fast as I would like. You would think that they would be super fast and super efficient, but they're really not. And so if you just have a really big business and you're not actually in Hong Kong and you're just relying on kind of this global team, it just became hey, we can do better than this. So the Hong Kong part is still in the structure. And we still run it as an offshore company because we've just never felt the need to hire people in Hong Kong. Obviously, people have other concerns these days, but that didn't really play into our equation. What I did announce, I think at Nomad Capitalist Live in 2021, was that we were basically moving the headquarters to the UAE. Now, one thing we've talked about the UAE recently, another kind of tax misconception is the UAE recently came out and said, hey, we're going to impose a 9% tax on onshore companies. There's still a few things that I think are a little bit unclear that will be resolved in the next 10 months or so. But by and large, our understanding is the way that we're structured in the UAE, in the free zone, will be exempt from the new 9% tax. And so we're going to make sure we're complying with all the other aspects and not working with people onshore in the UAE to maintain that 0% tax. And so that's a great headquarters because if you want to hire global talent who may be in places where one thing people aren't talking about in their corporate structures is you can have a structure in the UAE. If you go out and hire a bunch of Americans in that structure, the US might have something to say about that structure and they might drag you in with a US trade or business. Other countries might have the same thing. Other countries might have labor laws that your company will get dragged into. So the ability to issue visas through a free zone package to have people come and work in the UAE and then they get to reduce their personal taxes. Even an American can pay zero tax on potentially 120 grand, depending on their own tax situation, foreign income exclusion plus standard deduction. It's not a bad package to offer someone to be able to come and live in a place with good weather, and you can do that through your free zone company. So we moved our headquarters to the UAE. We don't have a ton of people there, but I do believe that having some people there will be important. And so versus Hong Kong, where work permits and that kind of stuff are a bit more difficult, and it's certainly not a place that as many people would really want to move to, especially Western talent, the UAE worked really well. And so you can run a company from the UAE. And what's really cool about the UAE is if you are personally a resident, you can then also bank in the UAE. So it's difficult, if not impossible, if you're not a resident. But in Hong Kong, the government was always really eager to bring in businesses, but then banks didn't want to bring in accounts from people who weren't in Hong Kong. Even some who were. HSBC even got rid of people who were its own employees who had side hustles living in Hong Kong. They didn't want their businesses accounts. So we have a bank in Hong Kong. We've got kind of a unique situation, a unique connection. But for most people, if you are incorporated in Hong Kong, maybe you're banking somewhere else in Asia. Even that's become more difficult. So the UAE makes things a little bit easier where you've got banks that the government has said, hey, if something happens in the past, they've said, hey, we'll take care of the banks. You would imagine perhaps they would say that again. So you've got strong banks, you've got strong jurisdiction, you've got the same tax-free status, and it's actually tax-free and it's actually easier on audit. So that's why we moved to the UAE, among other reasons. So a lot of benefits there. So a lot of offshore companies, a lot of businesses, you set up your offshore structure and you just have okay, I have one company at the top. However, the challenge is, what if you're in e-commerce? What if you're collecting payments? What if you have, as I hear from people all around the world, customers where they're like, I'm not sure if my customers want to pay my UAE bank. I don't know if they get that, right? And that's where you look at payment companies. Payment companies could be working at arm's length, and you could basically own both companies. So you could have, let's say, a company in Australia. We had one gentleman who really needed to collect payments in Australia, and even though services like Wise, TransferWise, now allow you to get Australian and UK and other countries' bank details locally, people just send the money right over. It goes into your TransferWise account. Again, now it's Wise. I think in his situation, he was getting payments through one of these afterpay kind of services, and it had to be in Australia. So he had to have an Australian company. And I think in his case, he actually owned the Australian company directly and then owned the offshore company. They just worked together. Sometimes they work together like that. Sometimes they're subsidiaries. But the bottom line is, for us, for kind of payment efficiency, for making things convenient for folks, for speed of payments, for just all that kind of stuff, payment companies in the structure, if you have people paying you from certain parts of the world, in our case, a lot of people pay us from the US and now also from Canada. And so having banking infrastructure and having a corporate infrastructure in the US can work. And so in some cases, you may pay a nominal amount of tax for the privilege of solely processing payments in one jurisdiction. In some cases, it'll be fully transparent and it's tax neutral, it doesn't add any tax. So you can have a separate payment entity to receive payments. And that's what a lot of people who set up companies in far-flung jurisdictions will do. I don't really encourage the Belizes and the Marshall Islands and all that, because I still think that your topco, your headquarters, should have some kind of banking infrastructure. So if you're setting up a company in the Marshall Islands, unless you're doing some very specific kind of business, you're probably not going to get very good banking infrastructure to move the money out of your payment company, which may be either required in some jurisdictions or simply advisable for liquidity. But a payment company is something that we use and that a lot of companies use. The other thing that we use as we have expanded our team is what we would call staffing companies. And so this is an issue that I think is going to become a rude awakening for a lot of people around the world, is that many companies, if you have people like working in a country, that could trigger tax issues, that could trigger labor law issues. This kind of remote work thing, it's really a brand new field in many ways of what are the requirements if you just decide, let's say you're a European company and a bunch of your full remote employees decide, hey, we're going to go and work in the United States for 6 months. What does that mean? Well, potentially it doesn't mean anything good, especially if your company, if your headquarters is incorporated in somewhere that is tax friendly. And so what you often want to do, and we do, is we say, okay, if we have one employee somewhere, we can often, and I think a lot of the countries where we have 1 or 2 people, they have good regimes for kind of individual entrepreneurs or freelancers or self-pay, where the government's like, hey, you're not going to get like the full pension benefits, which we then kind of just compensate for with just greater base pay. But you can just pay us the flat tax. We've got a couple different countries where it's like, okay, it's 10% or it's 11%, and like we just kind of top that up for them, and so they get the base pay, which kind of encapsulates all the future benefits they would get. Plus we just pay the tax for them, and then they just remit the tax, and we get the proof, and the government's cool with that. And so there's countries where you can pay 1, 3, 10, 11%, something like that. And so hiring people in countries which have more flexible tax regimes like that, some of the countries in the Balkans, for example, like Montenegro, North Macedonia, Kosovo, have regimes where it's like, hey, okay, you're a freelancer, here's our special regime for you. And so like that's cool, they're used to that. When you start hiring 20 people in one place, it's not really freelancers. When you say, hey, we're going to buy an office, as we own 3 offices near the main squares in 3 different cities, it's really harder to be like, we have a bunch of freelancers, right? And so what you want to set up then is you want to have some kind of staffing company where you're going to figure out, okay, what's the value that these 15 or 20 people contribute to the global organization, and what would it cost if we hired a third party to do this? So I'm not going to get into all the details of that. And obviously, by the way, none of this is tax advice. We have tax advisors and lawyers and professionals and experts all around the world, including an in-house team. And so if you want us to help you, you can just go to nomadcapitalist.com and we will. But if you have enough people, and there's different risk protocol, but if you have enough people, you perhaps want to isolate those people in a staffing company. There may be some countries when if you have just 1 person or 2 people, you want to isolate them in a staffing company, basically to keep them separate from your main company, not only to kind of segregate from a labor perspective, not only so that you can pay payroll taxes, which we now pay payroll taxes in numerous countries around the world, but also to make sure that they don't then conflict with your headquarters structure. So basically, as your company grows, you may have kind of a headquarters where kind of the decisions are made, and kind of the main part of the company, the brain trust. You may have payment companies where people are just paying you into, that are doing billing, that are accepting credit cards, that are doing stuff like that. You may also have staffing companies where you're employing people around the world that need to be segregated in their own local jurisdictions because of any number of reasons. And so when you start out, you're probably, again, going to have one structure, or maybe you have a 2-part structure. But as you continue to grow, you're going to have a multi-part structure. The biggest things that get in the way, again, are things like employees, are how you receive payments. If you are a one-man or one-woman show and your clients just pay you for consulting services via wire transfer, that's going to be a lot easier structure to set up. Now, if you're an American, there is a whole kind of business versus profession issue that maybe being a one-man or one-woman show isn't really a great idea. And so obviously, Americans have a special set of challenges. But for most people around the world, that's going to be a much easier structure to set up than, hey, I have 50 employees and they're all different places because I'm going where I'm treated best, and I accept payments through PayPal and Klarna and everything else. Like, that's going to be difficult. And so reducing some of those operational issues could make your offshore structure easier. But in the long run, I think that most people who are running 7 or 8-figure businesses say, hey, I can build a structure that has 5, 6, 7 different companies in it in the long run, and I'll learn how to run that, and I'll maybe in-house a finance person, or I'll work with someone like Nomad Capitalist, and I'll figure out how to use it eventually. It's not really that difficult. We have now a 3-person in-house finance team, and they handle, in addition to all the accounting and payments and special projects we have, they also handle managing this structure. Probably one person could do it if they were just managing this structure, doing the audits, filing the reports, talking to the banks. That's probably one person's job. And so you could hire that person somewhere else for probably less than what you would think to manage this structure, and then you can run your business offshore with total flexibility. If you're saving hundreds of thousands or millions of dollars a year, I don't want the structure to drag you down, especially because a lot of people's structure starts out being a lot more simple than ours.